The question is, I just paid for something. Was that an asset or an expense? Now, the reason that this is important to be aware of is that assets and expenses are treated differently for taxes. Expenses, whatever you've paid, you get to use that to reduce your taxes as an entire amount in that year. So if you pay $100 in bank fees, then you get to reduce your taxes by $100 that year. There's no deferral, there's no worries about it, you don't push it off to the next year. That year, reduce your taxes by $100. Now, if you purchased a vehicle, let's say for $10,000, then you don't get to reduce your income and you don't get to reduce your taxable income by the $10,000 that year. What happens is it becomes capitalized or it becomes an asset. When that happens, instead of claiming the entire amount as a tax write-off, you get to claim a portion of it. Each year you claim a small portion of that asset. The idea is that bank fees, for example, are month-to-month expense and are required to run a bank account. The value that you get from that expense is immediate or within a very short term. The value you get from paying your insurance is usually month to month or year to year. The value that you get from paying for materials, for example, is also usually within a very short period of time as you use it on projects or resell it. However, the value that you get from a vehicle can last you multiple years. Some vehicles can last 5, 10, with proper care, 15, 20 years. Because of that, the government's intention is to say, hey, instead of taking a $10,000 tax benefit, essentially reducing your taxable income by $10,000, that benefit over 1 year, let's take it over 10, 15, 20 years. By doing so, the idea is that you receive the tax benefit over the life of the value that you receive from the asset. Now, why do you need to worry about this? It's something that you need to do appropriately to record your taxes. The government expects business owners, and accountants and bookkeepers will often help them with this, but they expect business owners to track this and report assets appropriately. Because if you don't, then you get that large $10,000 benefit in the same year you purchased a vehicle. The government doesn't like that. They don't want that to happen. So this is something that you need to be aware of and track. Often assets are things that have multiple years of benefit and they often cost a little bit more. Something that's cheap but does have multiple years of benefit, you don't need to worry about capitalizing it. You usually begin to look at that when the value goes over $5,000 or usually $1,000. That's the difference between an asset and an expense. In short, an expense has value to you within a short period of time and an asset over a longer period of time.